Thank you for coming on to this session. We're basically just trying to look at the impact of COVID-19 on the economy and how it affects you and I. Basically, what I'll call looking at the microeconomic impact from the macroeconomy. And if you look at the COVID numbers, globally, you have over 2.7 million cases, over 210 countries. You have over 781,000 recovered cases and over 195,000 deaths. If you move to Nigeria, sorry, could everyone put their systems or their phones on mute? If you look at Nigeria, we have over 10,000 test cases, about 1,000 cases as of yesterday, over 27 states, and 208 discharged and 32 deaths. Now, if you look at the growth projections just before COVID-19, if you look at 2009 for the global economy, 2019, we were growing at 2.9. As of 2020, it's negative 3%. And if you break it further down into the advanced economies as well as the emerging markets, the advanced economies, right, as of 2020 is expected to grow by negative 6.1. And if you look at the emerging economies, expected to grow by negative 1%. This is what the growth projections from different sources are giving us today. This is from the World Metrics and the IMF, basically saying, looking at the growth projections on the back of COVID-19. Now, if we then come into Nigeria, what exactly does this mean for us? The interesting thing about COVID-19 is this. COVID-19 virtually decimated the global demand for oil. As we stand today, Nigerian oil, even at a discounted price, cargoes remain unsold. And on the back of the fact that demand has dropped, we have Brent prices dropping to $21 from the highs of $50, while the WTI dropped to negative 36 on the back of zero demand and limited storage space. And why is that important? The double whammy from the fact that the economy has shut down worldwide, global supply chain shut down, and oil prices also dropping, has meant that Nigeria, that depends on oil sales for about 60% of its revenues and 90% of its foreign exchange earnings, all of a sudden, there's no accretion to the Nigerian revenue base. On the back of that, we have reduced government revenue due to declining oil prices, and therefore, we've had to increase our budget deficit to 5.19 trillion from 2.17 trillion. If you look at it on the GDP, drop in economic activity on the back of the lockdowns, right? Our GDP 2020 forecast from Standard Chartered shows that it's expected that our GDP will go to negative 4.3% based on likely contraction in both oil and non-oil GDP. If you look at our balance of payments, all of a sudden, we can't attract foreign capital. Capital outflows are just leaving from every part, whether it's on the fixed income side, equity side, offshore players are leaving the market. People are moving to safety. On the back of that, Nigeria has also been downgraded by Fitch and S&P to B-. Then in the financial markets, FX reserves have dropped. Right now, FX rates move hovering between 360 to about 450 in different markets. Liquidity outflows from both the fixed income and equity markets, like I said, and even in interest rates. If you look at where inflation is, the interest rates are non-reflective of the current level of inflation. And if you now look at the key economic indicators, right? Inflation moving to 12.26, FX reserves down to 33.66 billion, right? Brent, 11.96, like I said, discounted, and yet no one's buying the cargoes, right? If you look at our foreign exchange, it's from 360 all the way down to all the way down now to about 450. In different markets, you get a pricing from 420, 430, 440, 450. And then, if you look at the interest rate environment, you have Treasury bills, 90 days, 360, between 1.8 to about 4%. You have FGN bonds between 9.85 to about 11.63, all the way to 12 for the longer tenors. And then you have CPs still hovering between 5 to about 7.5%. Now, if we then look at the policy responses and palliatives to COVID-19, so the government has tried to do a couple of things. Things like extension of moratorium for CBN facilities by 1 year, interest rate reduction to 5% from 9%, creation of a 50 billion targeted credit facility, 1.1 trillion intervention fund to support critical sectors. We even have the private sector coming in. The Bankers Committee on the Private Sector formed the Bankers Sector Coalition Against COVID-19. And then we have the launch of the Social Investment Program, basically to feed about 3.6 million households. But if we now look at where we are today, what do we expect? What really do we expect, and what have we seen? Clearly to us, if you look at the fiscal, monetary, and socio-economic of the country, the federal government has little leeway to provide a very large stimulus. If you compare to the likes of South Africa, which I think is about 26 billion, and the US yesterday, I think over $400 billion, right? We actually have little leeway because basically our revenues have been impacted by the double whammy of COVID-19 and dropping oil prices. The government has applied for more than $7 billion in emergency funds from the IMF, World Bank, ADB, and the IDB. The government has also joined the OPEC and OPEC Plus in the reduction of oil output by about 400,000 barrels per day to kick in by May in order to manage the issues around the oil prices. But then if you look at it, there's continued pressure on government revenues and reserves. On the socio-economic side, right, there's a struggle to actually enforce lockdowns. Because if you look at the high levels of poverty and employment, people are actually saying, look, are you going to allow me to stay at home and die? I've got to look for how to survive, right? Inequality will definitely worsen over this period. The gap between the rich and the poor will widen. Tax revenue will be impacted by the decline in economic activity. On the financial markets, definitely there's a flight to safety. Definitely there's a flight to safety. Funds have been flowing out from emerging markets. Sorry, Deshola, can you go back to the slide before the, yes, thank you. Funds have been going out of the emerging markets, basically a huge outflow of foreign capital. And people are looking for safe havens to go to. Gold has been an area where people have gone into. Prices have soared, almost approaching its 2012 levels, right? FX rates have, like I said, have risen to the heights of 450, indeed, depending on the market you're in. Long-term liquidity has become the focus for banks. Interest rates have remained largely unchanged, but expectation is that rates will rise if the situation continues. And of course, the equity market has actually been impacted negatively. If we then look at for businesses and firms, right, with the disruption in trade and global supply chain, trading activities are going to remain subdued. And a major focus is going to be on essential products and services. We expect that more tech companies will come into the market, and we believe that this is a time for people to focus on company fundamentals. In other words, how well are the companies being run? The companies you want to invest in, the companies you want to look at, how well are they being run? Because at this point in time, the fundamentals are very key over this crisis, right? You're going to look at things like, do you have long-term funding to support your activity, right? Are you a high debt company? Are you because at this point in time, with a lot of capital leaving the economy, how are you going to fund the activities of your company? And then for individuals, there's complete pressure on income, consumption. Consumption power is definitely going to change with reduced economic activities and inflation and even increased unemployment. So we now come to say, for the individual, what are the things you need to look at? With all this, look at FX rates are being impacted, interest rates, we're not sure, low levels, capital market, offshore players are leaving the market. The government is struggling with oil prices, struggling with so many things. What then do we need to do? It's a time for one, to review your spending patterns. It's a time to decide, do I really need to buy this? Do I really need to buy this? Do I need to cut down on my spend? Do I need to switch to a different and cheaper brand? Do I need to spend so much? If you plan to save to invest, then you need to review not only the value of your expenses, but the type of expense. In other words, eliminate unnecessary spending and focus on value spend. Also, you got to look at how much of your liquidity would you keep in cash to take advantage of any opportunity that comes forth. And also, you need to plan for the present. Where do I put my money in at the moment? What investment will hold the value of the value of my wealth? Do I invest in the company with the right fundamentals? In other words, good management. What do I do for the now? And then plan for the future. In other words, what sectors will be demanded for in the future as Nigeria begins to attract capital to build up? Is it the export side of the business? For investors with long-term capital, that could be an area of interest. And if you look at the world today, as the world economy recovers and some form of protectionism gathers steam, it's important to focus on homegrown solutions. Also look at things like agriculture, logistics, mining, and tech, and of course, digitization. And this is a strategy that we think that will work for individuals, because you've got to plan for the now. To hold your investment, you've got to plan for the future and manage your own personal expenses. And so at this point, I'll hand over to Titi to now go into the breakdown of these strategies and basically tell us where we need to go to as we go forward. Titi.
Thank you so much, Chuka. And, I really agree with, quite a lot of your thoughts. And when, at Sankore, we actually work with individual clients quite a bit. And so we've come up with a framework that we think will be helpful for them at this time. And it's really one where we say to you, look, there are three things you need to be doing right now. The first thing is actually diversification. The reason that is an extremely important thing for people to be thinking about is that every time there's a crisis, then we start running around trying to figure out what to do. What should I buy? What should I do with my money? And so on and so forth. The key thing is diversification is actually the thing that your portfolio needs to have in order to be able to ride up and downs. And given that we're already, about a month or two into the market turnaround, a lot of us have already lost a lot of money. Now is the time to say, what are the things we need to do in order to ride through the rest of this period and also prevent this from happening again in the future? So we say to people that you really need to be thinking of diversification at this time. Then the next thing is staying liquid. You need to stay liquid because it's important for you to, and I'll talk in detail about each of these. So staying liquid is extremely important as well. And then the next thing is then you need to start positioning and getting ready to acquire cheap assets. So now to talk about each of these three in a bit more detail, I'm going to start out with the diversification bits. As I explained, the reason diversification is important is, especially now that a lot of people have already lost a lot of money, you have to, just sort of take the lessons of the past and try to think about your portfolio from a high level perspective. What do I need to do with my portfolio? Instead of, running around just trying to make decisions that may not work out for you for the long term. Portfolio, managing your investments is actually a discipline, and setting up your portfolio in a way where you will be positioned to ride up and downs is really the important thing. So instead of rushing around and saying, okay, what can I buy now? First of all, take a look at your overall assets. What we find actually is majority of people don't have a sense of their net worth. Majority of people don't know how much they have overall. They don't know how much they have in fixed income, how much they have in stocks, private equity. It's actually important at this time to take the time to record and assess your entire portfolio and then try to figure out what is where and how much you have in each bucket. So I have here our moderate portfolio. This is a portfolio that was created for moderate risk clients. So conservative clients will be slightly different, aggressive clients will be slightly different. But this portfolio should actually work for a majority of people. And what this portfolio says is you actually need to make sure that you have a very big chunk of your assets sitting in fixed income. This is something that a lot of Nigerians do not do. But fixed income is called your sleep well money for a particular reason. By having a large enough allocation in fixed income, you can actually weather up and downs much better. So as you can see, we're recommending that you put 50% of your total net worth in fixed income. Then we would want you to divide that. Not all of it should be in one place. You should have a chunk of it in developed markets, another chunk in emerging markets, and then finally, of course, majority of it in Nigeria. Now, the reason this is important is think about if you had a diversified portfolio before this happened. You would already have had a good allocation to USD, to GBP, to Euro. You would already have a good allocation to other emerging currencies as well. So as you can see on the left on the page, we've talked to you about why the diversification is important. You would have reduced losses from currency devaluations and just reduced your overall portfolio volatility. So as you can see, that allocation to fixed income is probably the most important thing that every portfolio should have. And at this point, you taking a look at your portfolio, the first thing is focus on your fixed income allocation. And when I talk about cash and liquidity, we'll go into that a bit more. But it's extremely important for you to realize that you need to make sure that your portfolio is well diversified. Take the lessons from the pain we have felt now and make sure you're prepared for the next time. Then, of course, we have allocations here to equities, real estate, which is the preferred asset class for most Nigerian investors. But we actually see that most clients have that too much in their portfolio. It's usually 50% and up. But we actually recommend that it should be more than 27%. And then finally, smaller allocations to private equity and commodities as well. So overall, diversification is the number one thing that we're recommending for people to do now. Knowing that we've already seen people lose as much as 30 to 40% of their assets, this is a very good time for them to now look back and now craft a very clear strategy for the future. So moving on to the next slide, once you've actually taken a look at your portfolio and you've started to think actively about diversification, set a preference for diversifying towards cash for now. In other words, staying liquid. Cash is king, and honestly, liquid fixed income instruments are really the best thing for you to do right now. So we actually have in here just some of the things you should be thinking about with regards to your liquid fixed income allocation. So a lot of us have been complaining, of course, about T-bills and how low the yields are. Well, it is true, yields are as low as 4%, 5%, but guess what, it's a lot better than being in an asset class that's falling 20, 30%. This is one of the ways for you to just keep safe and secure at this time. T-bills and bond funds. We say bond funds because, again, generally to buy most bonds, you actually need a larger allocation of money, unless, of course, you're buying retail bonds and using platforms. But overall, we suggest for you to stay liquid in your naira allocation, which is the largest part of your fixed income allocation, by T-bills and bond funds. Then next, for your USD allocation, which everyone should have a small portion of it. We're very we want to be very clear that we do not believe that you should be speculating and buying dollars just because it's going up. It's actually not the right way to do it. Guess what? If you buy dollars at a rate that's too high and then it comes back down again, you would have actually lost a lot of money. But we're saying to you that for the long term, everyone should have a small allocation to global markets just to get diversification. And for that allocation, we recommend that you put your money in Euro bond funds. They're actually very attractive right now, especially Nigerian Euro bonds, with yields north of 10%. And they also provide a good level of income via coupons. So again, Euro bond funds are a really good place to put your USD allocation. But again, please remember, we are not recommending for you to speculate at this time. It can actually be a money-losing proposition. And then, again, we've mentioned again that we're not saying that you need money in dollars or even money abroad, but we know that there are a lot of clients who have that. And there are actually some clients, maybe because they have kids in school abroad, who have money sitting abroad just sitting there in cash. For that allocation, there are actually really good ways for you to protect yourself there and even grow a little bit. And generally, we recommend exchange-traded funds for that. And they're actually exchange-traded funds that provide liquid exposure to US government debt and emerging market denominated debt as well. So those are some of the recommendations we would have. So overall, think about it. You're diversifying, right? But you're diversifying right now towards cash while you wait, of course, for better opportunities. But right now, please keep in mind, cash is king. So moving on to the third prong of our approach, which is where we said stay ready to buy cheap assets. Everyone has heard the Warren Buffett saying, be greedy when others are fearful. Well, I actually just heard another one by Warren Buffett's partner, where he said that the big money is not in the buying and selling, but in the waiting. In other words, we actually think that there will be a lot of really good opportunities to invest over the next 3 to 6 months to a year. There are going to be lots of opportunities coming up. So be patient. The money is in the waiting. So don't rush, don't act with just sort of without detailed thinking. Really spend time to just think through what your strategy is. As we said, diversify, just sort of tilt towards cash, and then be ready to invest. There will be lots of great values. As it is right now, you may think to yourself, well, aren't people fearful right now? Well, actually, they were really fearful in March when we saw a really big drop. But, you know, over the last month or so, we've actually seen recoveries, which may be a bit early. It's actually possible that markets haven't fully priced in the impact of COVID on global growth. So we actually think that there will be much more opportunities coming up over the next 3 to 6 months. So be ready, in cash, ready to take advantage. And these are just some of the things that we think you should think about. On the local side, there will be lots of opportunities in real estate just because, again, that sort of lags the cycle, and real estate was already sort of at the bottom. There will be lots of opportunities to provide construction risk, provide funding to real estate developers who are going to have a hard time getting funding right now. Stocks are actually probably the only area where we're recommending for people to go in now, only because these stocks have been low in value for a while, so they make sense. So they're actually really good stocks with good fundamentals that make sense to look at now. And then private equity, this one is again over the next 3, 6 months to a year. Those of you that are entrepreneurs, those who like private equity and venture capital, this is a great time to start looking at businesses. There will be many small businesses struggling. This is a great time to start thinking about scaling through mergers and acquisitions and other types of business combinations. Then on the global scene, there will also be lots of opportunities there as well. We think that, you know, due to rising unemployment in places like the US and the UK, who have seen, you know, really long rallies in house prices, this will now be an interesting time to start going into those markets. This is more like 6 months to a year out. We should start seeing just sort of a weakening of the housing sector. Then for stocks, again, we have actually been telling clients for 2 years now not to go into US stocks. They're now much more attractive, so we're much more comfortable with them, but we still think that we may not yet be at the bottom. So again, this is about positioning, staying liquid, and, you know, waiting for volatility to drop a bit more. And then again, in the rest of the world, you know, we still also think that there will be lots of opportunities just due to growing protectionism. There'll be lots of opportunities for investing in the growth of companies that want to benefit from that protectionism. So now, the last slide that I'll talk about is just positioning for the future. And Chuka mentioned this earlier. You have to have a long-term strategy. So sure, I mean, even in looking at the Q&A right now, most of the questions are very focused on now. What do I buy now? What do I do now? You also have to have a long-term strategy. What are you going to do long-term to create long-term wealth for yourself? And what we said earlier, what Chuka mentioned earlier and I mentioned briefly, is the fact that, you know, just COVID, the post-COVID world and post-COVID Nigeria especially, may actually benefit from a little bit of more of an inward focus. So it is possible that there could be some backlash against China, which is, again, not fair. I mean, not exactly fair, but it's also something that could be to the benefit of individual countries that decide not to be so reliant on China as the infrastructure for world production. So what that means is countries will on their own now be thinking, how do I develop my own value chain? And other countries will also be looking to diversify outside of China into other low-cost production zones. And this is where Nigeria could really benefit. So we think that there are quite a few sectors that could benefit from just sort of tapping into this. And then also other sectors that are just good for us as a country in order to earn or conserve our forex, in order to create jobs and overall grow our economy. So low-cost housing is one that we really like, and we think that there really needs to be a strong focus on. Generally, you've seen in the past where there have been large drops in growth, countries have actually come together to spend money on rebuilding their countries. And this tends to lead to growth because construction tends to hire a lot of people. So it creates a lot of jobs. And then, of course, we're providing housing for people who need it. Technology-enabled solutions, again, Chuka also mentioned this earlier, is that, don't invest in tech for tech's sake. Invest in technologies that actually solve the problems that we have in Nigeria. So logistics solutions are some of those solutions that address issues that we have in the agricultural value chain, which is another one we think is really important to look at. The agricultural value chain is also another value chain that creates a lot of jobs, conserves, actually earns forex. So that's a really big one. And then, of course, manufacturing is another one. Again, we're starting to see, progress with power. There are actually different neighborhoods that have started to set up deals to have power. We're hoping that this will lead to an increase in manufacturing activity, so that we can start to position ourselves as an alternative to China. And then the last one I'll talk about overall is outsourcing. So the people on this call who are entrepreneurs, who are thinking of where to invest, outsourcing is a perfect industry for us in Nigeria to look at post-COVID. We're a highly educated country with, at least at the high school and up level, with quite a lot of people who speak English. So this means that outsourced services like customer service and just sort of other types of support, including marketing, could really be a big industry here, just like it was in India. So we're really suggesting that everyone really has a very clear long-term strategy. How do you build your businesses? How do you acquire and invest in businesses that will benefit post-COVID? So these are the sectors that we suggest that you look at. So I'll stop at this point and just sort of hand back to Deshala, because I think she has some questions for us, and then I think we're also going to be taking questions from the audience. So thank you.
Thank you very much, Titi. Yes, you're right. So, this has been fantastic. It's been really educative. And you and Chuka touched on the same thing, which is very interesting in terms of cost. People should stay liquid. People should position for the long term. But also in looking at that, so in listening and looking at what you both of you have said, it'll be good to know what, and I think this is for Chuka, what your outlook is for the naira, because I think these are the sort of key issues that people are concerned about. So Chuka, what is your outlook for the naira?
Anytime anyone asks me this question, I laugh, right? Because honestly, I wish I had a crystal ball, right? And if I did, I'll make a lot of money out of it, honestly. But I'll put it this way. If this continues, whereby there's a shutdown in the economy, and then oil prices remain at the current levels, and demand stays at the current levels and do not change, and we keep on having unsold cargoes, and we have basically demand just not there, then we could see the currency top out at the 500s. Offshore NDFs are currently trading around 510, if they haven't moved as of yesterday. But this is a worst case scenario. Our view is that the markets will see some form of recovery. We think that if you look at the analyst views as to what would happen to oil, some of the analysts, Goldman Sachs, Standard Chartered, are calling that oil prices will close the year at around $40 to $45 per barrel. We expect to see some further recovery if the 9.7 billion barrels of cuts coming in May. And so we do think that if the economies pick up, which I expect they will, because everybody's basically saying, look, we've got to get the economy back on track, and then demand sort of starts to filter in. I don't expect that demand will go back to the way it was before, even if it's at 50% demand and the oil prices come back up a bit. Then we may just stay around where we are at the moment. Like I said, depending on the market you're in, I think as of yesterday, it's almost around 450. We most likely will stay there if this continues, or move on to 500. If the markets recover a bit, then I would say that we'll be looking at maybe around the 420 levels if the market actually recovers, even if it's 50% recovery.
Yeah, I agree with that as well. I do think.
Okay, I was going to ask you what
fair
your
value.
was, Titi.
Yeah, like again, for us, we are very fundamental based. So it means that we don't, we're not in the business of predicting what will happen tomorrow. Again, we all know that parallel markets could go anywhere. However, be aware that what goes up must come down. Let's take the lessons from the previous time this happened. Remember, we went from 160 all the way to 500 and back to 360. So the people who bought at 500 definitely lost a lot of money. So that's why we generally do not encourage people to speculate. But the fundamental fair value of naira at these, given what has gone on, is probably about 420 to 440 or so, which is exactly what Chuka was saying. Yeah. So at the end of the day, just keep that fair value in mind so that you don't make any mistakes. There are people already who want to go off and buy at 500. You could buy at 500, you could make money, but you could also lose money. It's better, to just be very thoughtful about your investments.
Yeah.
Okay, thank you. So this question leads me to another question around naira exchange rate as well. So are investments in FGN debt like Eurobonds, T-bills safe, given the decrease in government revenues from oil? So I think this is for Chuka as well.
Okay, so I'll take it into, honestly, my personal view, it is safe. It's a safe investment, whether it's treasury bills, local currency, or even offshore Eurobonds. I don't think that Nigeria will toy with the idea of defaulting on any one of its offshore paper. It has bigger implications for the economy. If you look at the structure of the Nigerian economy, we've been run practically by inflow of capital into this economy. Capital is what's kept Nigeria. Nobody should make any mistakes about it. Whether it's capital coming in from Nigerians living abroad, or even capital from the portfolio flows, or even capital from international banks, or capital from DFIs, that's what's keeping this economy. If we default on any one of our Eurobonds, it has big implications, and then we'll be talking about a worst case scenario like a Venezuela, and it's unthinkable. So my view is that I don't think Nigeria will toy with the idea of having a default. I actually think that they will do whatever they need to do to make that payment first, and then seek to access liquidity from the market. If you remember, before this crisis, Nigeria sought to borrow money from the markets to actually bridge its revenue shortfalls, the budget deficits. It still needs to go back into the market. And if you remember what I said earlier on, Nigeria has gone for $7 billion from different entities. Nigeria still needs to go into the market to raise money to cover its position. So on that front, I think my view is that those are safe investments. I don't think there'll be a default. On the local currency side, pretty straightforward. There's never been one. I don't think there will ever be. I think those are safe investments also. So Titi, I don't also agree with that view.
Yes, I do. And I would just add to that, that on the Eurobond side, they can take care of it because of the size of the obligation, right? So the overall volume is, of course, large. It's about 11 billion, but the annual coupon payments are under $1 billion. So I think it's about $800 million or something like that. So they can afford to pay it. It's not something that they need to worry about or we need to worry about. But we're very much interested in Eurobond investments at this time. We think they're excellent investments, and we think that they're actually mispriced, so they make for a good value investment.
Okay. Thank you very much. Spot on. Then another key issue that we would like to speak about is zero oil. So we hear that oil went negative earlier in the week. What exactly does that mean? And how, and does this mean that we are not making money from our oil? I think you should have the honor of answering that question. Hello?
Okay, so I think Titi needs to come back on. Just hold on, let's see.
Her screen might be frozen. So maybe Chuka, can you just give us your view and then we can hear Titi's.
Okay, so I think that zero oil is really just a technicality around futures and has to do with the fact that understand that WTI references oil, the US oil market, and it's the WTI is traded in for physical delivery, and the physical delivery is done in Cushing, Oklahoma. And what had happened was that storage in Cushing was already at 70% or 75% full. And holders of long positions, which meant basically saying, I had a position whereby I was going to buy oil, were worried as to say, look, if I was going to get settled, I was going to get settled. I had to take delivery. I had to store the oil in Cushing, and knowing very well that storage was full. So what happened was immediately people just said, look, there was no demand. What am I doing with oil? I'm going to have to take physical delivery. There's no storage. The best thing people wanted was just to sell off that position, sell off the position on oil, because nobody actually wanted to be long the liquidity and put it and now be worried about storage. And as such, all the people immediately just sold off the position and it went into zero. If you see, as usual in all trading things, it's always overdone. And therefore you see that it has recovered back, right? I think for May settlement, I think it's almost around $10 or so, 10 to about $15 or so is recovered back. But the point is that as we get to the delivery dates, right, of that contract, and storage is still an issue, the holders of those contracts are also going to sell off that position because demand hasn't recovered. And as long as demand has not recovered, they will be worried about where to store the oil. And so that is the reason why we saw a negative pricing on oil. Now, one thing to notice is that Nigeria is not benchmarked against the WTI. Nigeria is benchmarked against Brent. And even upon that, Brent was still priced around $26 per barrel. So these are two unrelated things. Understand that the futures contracts have a different way depending on how it's being settled. And because of that settlement risk and the fact that you need to look for storage, it's impacted negatively on the pricing. But for Nigeria, we are definitely Brent is still trading around $26. But it still does not take away the risk around the fact that we can't even sell even at 26. Nigeria has discounted its cargoes to about $11 or $12, and still nobody is buying the oil. So even though they are unrelated, you've got to look at the fact that COVID-19 has actually impacted on demand. And because of that impact on demand, right, it has made it difficult for us to sell our cargoes. Our usual partners who buy oil are no more there. And therefore, it's having a negative impact on our revenues. So that's really what I would say to that.
Thank you, Chuka. So we should still proceed with caution, is what I hear. Cash is king, diversify your portfolio, and wait and look out for other opportunities that might come in the course of the year. So we want to go to our question and answer session. We have 89 questions, but most of them have been addressed during the presentation. So I'll just go into specific questions because people have actually sent in specific questions for you, Chuka, and specific questions for Titi. But I think Titi has had a drop off. I'm sure she's trying to get back in. So I'll just ask you questions directed at you, Chuka, while we wait for Titi to join. So one person says, good morning, Chuka. How does COVID-19 differ from past episodes, such as SARS in 2003 and the avian flu in 1997? How do the economic risks differ?
Okay. Well, I'll say that what is worse for this is the issue around the transmissibility or so, because in this case for COVID-19, because of the fact that you can't tell the way in which the disease is being transmitted, what's happened is that countries have shut down, right? Shut down, and with the shutdown, it further complicates and how do I say, any economic growth in any country anywhere in the world. So back in the days, we were studying. I mean, I laugh about this. I studied economics, and my project was on trade liberalization, right? And if you look at it today, COVID-19 has actually now caused the world to not look at the me first. Basically, I've got to start thinking about how do I produce my own healthcare equipment. I've got to start thinking about how I produce my own food. I've got to start thinking about how I manufacture my own things, essential things. I've got to start thinking about that. It's basically changing the way in which the world looks at itself as an economy and how you interact with all the parts of the world. Airlines are down. There's no flight going in. So many sectors are going to face a lot of pain. Hotels, cinemas, so many things. It goes into our day-to-day life, And if you look at it, look at Nigeria, we're not only dealing with the fact that oil prices have gone down, the fact that the economy is down, we can't even get out to work, right? Double whammy. Upon that, we have foreigners, everybody's running on saying, look, I got to take my money to a safe place, right? I don't want to put my money in any economy. I'd rather go to gold, a commodity that I know that will stand the test of time, right? So when you compare it to other parts, there are bits and pieces of the same thing that's happening in the economy with all this other crisis that happened in 1918 and when. But this is about to change the way in which we live our lives going forward. So, because the question is, I mean, I'm looking at my team basically today and I'm saying, do I need everybody back in the office? Maybe I've got to put some people at home to run their functions from there. Do I need to think about location? If I have some of my staff who've moved into Canada, do I get them to trade from there? It just changes the way in which we live day in, day out. And I don't think we'll ever get back to where we were before. Maybe a vaccine will help us out, right? But I don't see economic activity moving to that level. I think we're moving to an era of some bit of protectionism that will begin to change economic dynamics between different countries, begin to affect currencies, right? Begin to affect interest rates, begin to affect the way people see emerging markets especially. And because your risk profile has suddenly gone up. If before your risk profile was, let's say 10, you've suddenly gone to a level that, I mean, people have to add a different factor to you. So I think that those are the differences from where I sit. Like I said, there are bits and pieces of the same things that have happened in all the other crises, but I think this is actually going to change the way in which we live our lives going forward.
Most definitely, because I mean, this is global. I think those other ones were more even central. They were concentrated in different regions as opposed to this that has impacted the entire world. So sorry, Titi, welcome back.
Thank
I
you.
was saying before you dropped off that we have questions. We have, at the moment, about 90 questions, to be honest.
Yeah.
And we'll just go and run through as many as we can. And if we can't get to your question, what we'll do is batch questions together and then maybe have another seminar to address those questions. So, Titi, this is from a salary earner, and this is directed at to you. Please specify exact industry to diversify into for a salary worker in the oil and gas sector.
Oh, that's a good one. Very specifics, right? So I actually think that there are two ways to look at it. You could diversify by diversifying your investments. So imagine you're already working in the oil and gas sector. There is some risk to doing that. So on the investment side, you could actually, of course, you know, I already showed you just sort of how to think about your portfolio. Make sure you have fixed income, but then you could also invest in agriculture. It's actually a good time to do so. Again, you know, there's some popularity around investing in agri platforms. Especially at this time, one has to be very careful which platform one uses. So you really want to go for the top ones, but agri-finance is actually one that we think will actually continue to grow post-COVID because there's just going to be a strong need to finance the food that we eat and just sort of decreasing our reliance on imports. I mean, previous times when we've seen these kind of crises, you've seen the government actually shut down imports of certain types of food. So we actually think that there will actually be continued growth in agriculture. So diversifying into agriculture makes sense. And there are many ways now for salary earners to do that. Investing in agri-finance is one. We've also seen salary earners start on the side, build small agriculture businesses, even if it's just to, breed chickens and so on and so forth. You'd be surprised that this could be the beginning of an entrepreneurial venture. So those are some of the things that I think people could look
at. Thank you, Titi. We have another question. So the person has 4 questions, but we've answered 2 and 3. So 2 is what's your strategy for investing in the Nigerian equity market? I think we've covered that in your slide. What are your top 3 shares on the Nigerian equity market? But the one that is of interest to me is, what is your outlook on the direction of the crude oil price in the next 6 to 9 months? So I don't know, Chuka or Titi?
Sorry, say that again.
What is your outlook on the direction of crude oil prices in the next 6 to 9 months?
Yeah, I think I already answered that, actually.
Yeah, you gave, yeah.
I said the expectation is that oil will be between $40 to $45 per barrel by the end of the year into 2021.
Yeah. And you know, there could be downside risk to that. So definitely, I think that assuming things go well, we could get to those numbers. But we also warn people to be aware that things could also be, you know, oil is extremely volatile as well. You know, so definitely we want people to also not be too worried if things drop below that a bit, because as Chuka was saying, by 2021, which is really where you should be thinking about, we should be back at 40 oil. But be ready for things to be volatile between now and then, right? So next month could be really bad. In fact, just as we saw zero oil for the May contract, we may see zero oil again for the June contract because of that same storage problem. But people should really be thinking out to where Chuka is talking about, which is, don't worry, this too shall pass. We'll get back to 40, 45, hopefully in 2021.
Okay, thank you. So somebody else asked, what sectors are going to survive apart from pharmaceutical, healthcare, and food supply chain? Do you think hospitality? I would like to know what shift looks like in your opinion.
Okay. So my view is that some of the sectors that will win, like it said, is the medical supply, food processing, retail, agriculture, personal health care, ICT, technology. You know, technology is very big. And like Titi has said, technology being used to enhance the sectors that are performing. So in healthcare, how do you use technology? In education, how do you use technology? In agriculture, how do you use technology, right? In logistics, how do you use technology? And I think if you look at, there's a company, I think 360 Kobo, right? You see how they're using technology in logistics. These areas are actually going to boom over this period. I actually personally feel that this is a time for us to innovation and technology education, right? Because as we look inwards, right, how do we, what kind of technology are we going to use? You know, the other day, I was trying to buy some drone, you know, and I was looking and saying, why are drones not produced in Nigeria? What technology? What's so big? But guess what? We're so used to buying everything outside this country. I actually think that if you look at these sectors, like Titi's talked about, whether it's manufacturing, agri value chain, whether it is e-commerce, whether it's logistics, in the midst of it is technology. And those sectors will need to be, will definitely see some benefit over this period. Even manufacturing. One of the questions I ask myself is Nigeria ready to join the world supply chain? I watched something yesterday where in Ghana, they are, all of a sudden Ghana was one of the largest exporters of bananas. And I'm looking at some French company comes into Ghana to push Ghana to become one of the top exporters of bananas. Guess what? There are jobs being created. People get money. You conserve FX, right? Those are the kind of things that we need to see in Nigeria. I think those are the areas, like Titi has said, those are the areas that will actually function. You're going to see a reduction in definitely areas like oil and gas, some even different depending on type of construction, aviation, tourism, and leisure. Tourism is going to take a huge hit until there is a vaccine. Until there's a vaccine, nobody's going to want to travel. You're going to say, look, get in there. How am I going to be on the plane? I mean, some of us go onto the plane and we just start snoring. This time around, you're going to snore. You're going to sit on that plane and tell yourself, wait a second, is the next guy coughing? The guy, look, what's happening? I got to watch myself. And when you get into the airport, guess what? Typically, you get in some airports and they're like 1,000 people. How are we going to do it? So I actually think that there has to be some change in what we call tourism. I think that area has to change and walk in line with the new normal until a vaccine comes through. Aviation and maritime will also take a hit. Aviation and maritime will definitely take a hit. I think people just need to walk within the confines of COVID-19 and walk through and try and see how you can restructure your business in light of issues on ground, right? And change your business and restructure your business to basically accept different things. I mean, yesterday I got a post, Eco Hotel is sending in, trying to deliver food. And you got to go online and pay. And I'm like, Eco Hotel, delivering food. Guess what? They're not making money. People are no more coming to the hotels. Check the amount of dead capital, the amount of dead capital that COVID-19 has imposed on people. They have to actually think outside the box and think of something new to do. And I don't know if you have anything to add to that.
Yeah, I think that's it, really. You've covered it all. I completely agree with what you're saying. And the key is to focus on those sectors that are just sort of perennial, you know. The key thing is we're still people who have needs. Just go down to the basics of things, you know. We still need housing, we need food, we need certain problems solved, you know. So thinking at that low level is the best way, and plugging yourself into just sort of, as Chuka said, the new normal. So when I mentioned outsourced services, for example, this is actually gonna be something that is much more common now, because outsourced services tend to be stuff that people can do online, virtually, over the phone, you know. So those are the businesses of the future post-COVID. And it's actually opening up a lot of opportunities for countries like ours that have a low cost base, especially given depreciation. So these are the businesses that really we should be building in order to serve the rest of the world, because now they're going to be very open to being served virtually. Yeah.
Okay, in fact, somebody had asked that question, please define outsourcing. So you've done that already. But Chuka, back to what we were talking, so back to what you were saying about manufacturing moving out of China, because this pandemic has shown that countries should look inward, and it might impact globalization as we know it. I mean, there's, like you said,
We've not done anything. So at this point in time, we are going to come inwards and look inwards and say, where are those efficiencies, those advantages that we had before, that we've let go, get them. And this speaks to the social well-being of the country. When it's health, food security, we've got to take charge of some of these areas, and even technology, and take charge of it. And then, whatever the cost may be, over time, we'll begin to get the advantage. One thing, Nigeria, do you know that Nigeria has not utilized its labor force? Its labor force. We have not even utilized a quarter of our labor force, which is cheap labor that can be used actually to develop some of these sectors. So I think that, look, we're just going to have to look at certain areas that are very key for us as a nation and basically build that up. And I don't know, Titi, what you have to say.
Yeah, I agree with everything. And from an emotional standpoint, for someone who grew up in the University of Ibadan, I loved everything that you said. And that's the thing, it's that I think sometimes we doubt ourselves, but we forget our old glory. It's important to actually not forget that China is no longer the low-cost producer of the world. They're just the engine of the world because they do it so well and they have such deep experience. So people now are not paying the lowest cost to get it out of China anymore. It's starting to move to the rest of Southeast Asia. And if it's moving anyway, the key is there was probably some inertia. You know, when you've been using someone for a while and you trust them, as their costs go up, you probably stay with them. Let's be aware that the timing is perfect now because of the change in mind about China. The timing is perfect now to actually offer a truly low-cost alternative. And Africa, given just sort of depreciation of our currencies, the cost is going to be much lower. Now, remember, the issue with our cost primarily is things like power and all that kind of stuff. I think that once we're able to sort some of those in a small way, just like some of these other, just like neighborhoods are doing, if we're able to just build industrial parks that can keep the cost of power down, I think that cost will actually be an advantage for us rather than a disadvantage. So that's my summary there is I think we need to look into the numbers a bit and actually be aware that, definitely by way of labor, by way of quite a lot of things, we can be a low cost producer if we focus our efforts on that.
Okay, thank you. Then Titi, another question, and it goes to you. How are African exchanges collaborating to offer a diverse universe of instruments to investors?
So African exchanges overall have actually been doing a lot of work to try to come together a bit more and offer, products to each other's, because again, as you know, African countries are very disconnected generally. So African exchanges have actually been coming together quite a bit. I mean, I was at an event that included quite a lot of exchanges just a few months back, and there's just a lot of talk about unity. I think that it's taking some time because of just sort of the operational technology and so on and so forth. I think that, in a post-COVID environment, I think enterprise technology is another sector that I think will take off. And with the right technologies in place, then you may see a lot more from exchanges. You may see access, you may be able to buy Ghanaian stocks from Lagos and so on and so forth. Those things that I think are coming soon. But as I said, there could be a lot more done, and there needs to be a lot more speed and a lot more collaboration. But there are definitely a lot of, technology problems that need to be solved, moving of money and so on and so forth. So I honestly think that until the exchanges can figure out how to involve a broader selection of solution providers, so involving the banks, involving the payment companies, it may take some time. And post-COVID, hopefully there is more of impetus to do so. So we should then see much more option.
Okay, thanks, Titi, for that answer. So another question is, what will funding to SMEs look like post-COVID-19, and how will financing be priced to enable investments in and by SMEs? Chuka?
Okay, what will funding to SMEs look like? I think that there definitely has to be a renewed focus on the SME side of the business. The good part about it is that even without the crisis, we still have influx of capital directly into the SMEs coming from the DFIs. There's no way Nigeria can grow without developing that space, right? That it's very key. We need to put money into that space, because without that, people can't even grow their lives and can't even save. How does somebody save when he doesn't even have a job? And if you look at Germany, if you study Germany, you will see what Germany has. Germany has this SME type business that is actually running the economy. People think it's just go and check it. In fact, in Germany, you come out, you have a choice to actually go to technical school or actually go to university, right? And you find out that most of them, they go to technical school. They're the guys working in the Mercedes-Benz shops. They're the guys who are working, manufacturing the PPEs. They're the guys on the streets doing different kinds of plumbing things. We actually had that plan in place, but we've not actually fulfilled the potential. It's important for us to put a structure around how we develop the SMEs, because that is the driver of the growth of this economy. And once we're able to put that structure in place and ensure that people what they said they will do. The typical thing here is that you get money to an SME. The guy, there's nobody teaching him how to run business. He doesn't know how to run business. He just takes the money. Before you know what's happening, the money is off. Nothing is done. There's no capital formation. There's no growth, nothing. And then at the end of the day, we're back saying, give us more money to the same SME. It will always be there. The pricing may move, especially if it's a foreign currency type transaction, because general levels of pricing have moved. But like if you see what Titi and I have been saying, this over the next 6 months, we should have some bit of stability in the market. I think that locally, the CBN has actually still been offering funding to the SMEs at very good pricing. I think that's actually very good, because it sort of implies that the central bank understands that the SMEs are the function of this economy, and therefore pricing in local currency to those SMEs would actually, it's not going to change dramatically. And I think still be liquidity to fund those companies.
Okay, Titi, do you have a different take, or you agree with Chuka?
I agree with Chuka. I think he's very well positioned to answer this question.
Okay. So another question we have here is, what is the bank's stand and advice with regards to investment in digital currencies? For example, Bitcoins. How safe or volatile can this investment be during COVID-19?
Okay, so I'm wondering how to invest. I think Titi should be the one to answer this. But my personal view, and maybe it's just my own personal view, I'm not saying it's a common view because we don't trade cryptos. We don't trade cryptos in the union, but I think people should just be careful. If you're trading volatility, then that's fine. Understand the volatility you're trading and trade it. The question is, do we really understand the volatility that we're trading? That's really the question. And so if you understand the volatility that you're trading, if you understand the volatility of cryptos, then you can trade it. But if you don't understand the volatility, don't trade it. One policy we have, Ross, is that we don't trade currencies that we don't understand. So I won't go and trade a JPY, a Japanese yen against CNY, Chinese yuan. I mean, I don't understand the currencies, so I won't trade it, right? But I may trade GBP USD because I understand two currencies. I can understand the economic foundations of the two countries, and I can understand what happens when one of the countries, either Bank of England says, I'm going to cut rates. I know what will happen to the rates, and I can trade it. But I personally don't understand the volatility in cryptos, so I personally do not trade it. But my advice is that if you understand the volatility and you can predict the volatility, then of course you can trade it.
I can add to that because I would say that this is definitely a question we get from clients quite a bit over the last 5 years maybe. And it got to a point where we actually considered some changes to our portfolio allocations. We now have a T90 allocation called your Hail Mary allocation. And the reason we call because of what Chuka over and over again, only buy things of value. But there's also the human desire as coverage of the recent interest in lottery and so on and so forth. So if you actually model it and say, look, there is this tiny likelihood that you could buy this thing that becomes 100 times its value, to be something really tiny, like 0.01% or something like that. And that's Hail Mary allocation. In other words, you can feel free to buy Bitcoin or any other sort of very, very tiny. Now, the reason we say that is be aware that there is no underlying value for Bitcoin. So most other currencies, what most people forget is most currencies are actually backed by the full faith and credit of a country. So that means it's backed by the country's reserves, backed by the country's future earnings. For Bitcoin, there's nothing like that. It's backed by all of our collective belief in Bitcoin, and that can go away like that. So we are believers that if you're looking at Bitcoin and the technology that it's built on and really believe in it, what makes more sense is to invest in blockchain-enabled businesses from a venture capital perspective, rather than buying themselves. This point is similar to you putting money in BetNaija or anything like that. So as long as you're fine with it being a gamble, then feel free. But be aware that because it's a gamble and something that doesn't truly have underlying value, you have to size it appropriately. It should be a very, very small allocation of your total net worth. So if you're worth 100,000 Naira, you should not put more than 50 Naira into it, you know, something that small. That's the only way it makes sense, because otherwise, what are you really buying? Now, this is not to say that Bitcoin may not go up 50%, but things without value also go up and down. Those of you that are familiar with the tulip bubble know that there was a time tulips were trading at ridiculous prices just because people thought it made sense at the time. It can also turn around. So for investors, we don't recommend that you look at Bitcoin as part of your long-term investment strategy, but we're very interested in looking at blockchain investments as part of your long-term portfolio, as part of your venture capital. So that would be my summary on Bitcoin.
Okay, thanks, Titi. Now, somebody wants to hear your opinion, both of you, on opening the economy by next week. Is it right for the economy in the long run? I'm not sure where this person got the economy will be open up next week, but just in the event that it is.
I have some thoughts on that. So the key thing is, and by the way, I would say this is more of a personal viewpoint because, again, it's still very much up for debate. I do think that lockdown may not be the exact right answer for Nigeria for just some basic reasons. We don't have the safety nets that the other countries that are doing lockdowns have. So in the US, for example, if you're unemployed, you can actually apply for unemployment benefits, right? So given our lack of capacity to take care of those who are most impacted by the lockdown, I'm not sure that that's the right direction to go. So if I were to be giving advice, I would actually say that we should be looking at other countries that have not gone the extreme lockdown route, because they're actually countries that have managed COVID without going to the extreme of a total lockdown. There are lots of rules you can put in place that would make sense. You can still ban certain size gatherings. You can make it a rule that everyone has to wear face masks. In fact, what that would do is it would actually increase production of face masks in the country. And if you have preference for locally developed face masks, that would even be better. You can also, just sort of recommend for companies to try their best to work from home if they can for non-essential staff. You can, there's just lots of things you can do that other countries have done that don't involve a total shutdown and a complete decrease and a complete elimination of economic activity. The key thing to remember is in many of these countries, people are not going to starve because they have governments there to ensure that they don't. There's some recent information that just came out just a few days ago that shows that in hot environments, now remember this was something that people weren't sure about, but recently we now have some information that the virus does not live in the air as long in hot environments. So whereas it can actually live for several hours, here it's maybe minutes. So what that means is the transferability of the virus may be a bit lower in countries like ours. And additionally, let's not forget that the death rate above 55 is the highest in countries that just have very old populations, right? So of course, it is still important for us not to overwhelm our health systems, but we think that there are other non-lockdown ways to do so. So again, just to summarize, it's still removing, it's still creating limits on really large gatherings. It's necessitating masks and so on and so forth. So there are alternatives to a complete lockdown, and we would actually recommend that the government start to look at that, because you have to remember that we have other problems. We have malnutrition as a major problem in this country. So if you have a scenario where children cannot eat, you're actually getting to a point where you're actually stunting kids for life. So those are big problems that could come out of COVID. It could end up being that in a few years, we see that there have been an entire group of kids who just were not able to get the right nutrition at this time. So it's very important for us that we balance everything and just come up with what works best for us as a country. And because we're just not as rich as other countries that can, just feed everyone, we really have to keep that in mind.
Chuka, do you have a different view?
No, I agree with her. Look, the way we are, we've got to be careful so we don't have a social disorder. Very key. I mean, if you go to certain places, there's nothing like lockdown. People are going and doing their business. So I think there just has to be adjustments to the way in which we manage this, put some restrictions on certain things. Like Titi said, get everybody to wear face masks. Get everybody, let the local guys begin to produce PPE and face masks, support them, invest in them, build them up, and they could move from producing face masks, PPE sectors, and then you will see these guys grow. They love Nigerians looking for things to do. They love innovative Nigerians out there. All they need is somebody to put some faith in them, put some investment to back them. I think there has to be amendments to the way in which the lockdown is being implemented.
Okay, thank you. So one question that is recurring is a big value chain. So people have asked for more detailed explanation. What is the best entry point for new investors, and what are the investments entry strategies people should look at?
I was saying earlier that there are different ways to play agriculture. I mean, if you want approach to it, it's just investing in the most basic one is input financing, which is, and by the way, a lot of people have heard of, platforms like Farm Crowdy. Of course, I have to shout out our own Wealth.ng as well. And we give access to you investing in notes that provide inputs to farmers. That's a very simple way for an investor to be part of the agriculture value chain and provide money to farmers to farm, which they then pay back after farming. So this is a very simple, no passive way, right? And I think that, unlocking finance to that sector is extremely important, especially at this time. And I think it's going to be one of the things that actually grows post-COVID. For those who want much more active, and I'm actually very excited that more people are asking about agriculture. I think the investments that the federal government has made over the last few years to diversify our economy, especially by agriculture, has been a bit helpful because, a few years back, people just kind of looked at agriculture as, yeah, I would never do that. But now we're getting a lot of people saying, how can I get involved? We realize there is a potential for profit there. And to be honest, we're recommending to people that, look, there are lots of ways that you could be part of the value chain as well. I know lots of people who are starting to be involved in just small businesses on the production side, which is actually an important thing. I think a lot of people are not aware that we still import chickens. We still import chicken in this country. And it's just because we don't produce enough to consume. So one of there are lots of small businesses that people could start that could grow into larger businesses. But imagine if 1 million Nigerians were going to start just rearing chickens, this is actually something that could really put a dent in our imports. Of course, each person is just doing a small volume, but over time, this could actually be something that is actually quite significant. There are lots of people that are doing, organic vegetables, lots of small businesses actually. And I mean, we all know about tomatoes. Let's not forget that, there are quite a lot of places not too far from Lagos where you have access to land. I mean, I already know of some of our mass affluent and HNI clients who are going out buying small farms in Ogun State, and you'd be surprised how inexpensive it is to do so. Buying small farms in Ogun State, hiring a farm manager, and they're producing. I had another client where we worked with them to set up a plantain chip factory. So now they grow plantains and make them into chips. There are lots of ways to get into food, to get into agriculture. And so just doing a little bit of investigation, trying to figure out what others are doing, what's simple, what's not too difficult. As I said, there's the extreme passive way, which is to invest via a platform to provide financing to farmers. And then there's the way of you wanting to actually produce food yourself. And that is actually quite doable. If you want to go the way of commercial as well, of course, there are some people who have that experience and they can get access to financing even from the federal government to do so. So again, I think one could talk on and on about agriculture. I'll definitely stop at this point because I'm sure we have other questions.
So what I was going to say was that Titi and I are going to be doing there are going to be some other follow-up webinars focusing on certain areas. So even as we talk about agriculture, we're going to have a session on that, and we'll be able to now go deeper because it seems like it's an area that people want to actually look at. So there will be a series of additional webinars on different sectors or different areas, whether it's even on investments, that we'll be coming up with. And so we will definitely let the public know so that we can then look through and sort of make it as interactive as possible, where we can talk about the risks, financing, and what's the entry point, what's the best way to go about this.
Okay, so we're almost out of time, but I have one question here, which would be to both of you. Current inflation rate is around 13% and still rising. The implication here is that I need an investment with an ROI within the inflation rate, which is not currently obtainable. What do you advise I do as per investment?
The person is asking for an investment above inflation.
Yeah.
Yes.
So interestingly enough, there are some investments that can beat inflation. I already mentioned one of them, which is input financing of agriculture. So there are a lot of people who've already heard about all these things online. As I said, you still have to be very, very careful in selecting the right platforms, because we've actually heard that there are quite a lot of them that default. So you have to be very careful in selecting the right one. But again, you definitely can do much more than inflation with input financing of agriculture notes. We actually .ng are via AFEX, which is a commodity exchange registered by the Securities and Exchange Commission. So their input notes actually yield north of 15%. I think it's as high as 18%. That's one investment that's inflation. But remember, and I showed you the type of allocation you should have. This is not the kind of thing that you put all your money into. Agriculture is still risky, so you have to size it appropriately. We generally don't recommend putting more than 2% of your net worth, even if you're aggressive, maximum 5% in agriculture. It's something you have to really make sure that you're aware that there are risks to agriculture. Say, for example, if you invest in an input note and there is an act of God. You know, I mean, we're in the middle of one act of God right now, but another act of God could be just a famine or something happening, which happens frequently in agriculture. I mean, I think the numbers are, different crops have different ones, but it's things like between once every 7 years and once every 5 years, there can be a total loss. So you have to size these type of things appropriately, but definitely agriculture input financing is one. Another one is housing. One of the areas that we're looking at and hoping to make available for people is fractional investments in housing. So we like, for example, student housing. Again, you know, general residential in Lagos is not very high yielding. I mean, the average yields of most properties are about 3 to 5%, high-end, mid to high-end residential. So that's not the space we like. I mentioned before, low cost, low to low middle housing. And student housing kind of sits somewhere there. And so those ones could easily get you yields north of 14, 15% as well. Maybe more if you take development, you're above inflation. But again, they're not that many without you taking certain levels of risk. And so when it comes to risk, you do have to size appropriately. Don't forget to always, before you take the risk into those higher than inflation investments, make sure that you already have your fixed income allocation. Remember, I said that's your sleep. It's hard for you to beat inflation at this time, but you will sleep well at night knowing that you have put money into fixed income. And the highest yields you can get right now are really, you know, bonds and so on and so forth. So, but remember, for liquidity, T-bills still always make some sense. So again, yes, you're chasing return, but don't forget to make sure that your security is there.
Okay. Chuka, do you have anything to add?
No, I think basically answered. I think a lot of us, we want something, but we need to be careful of the risk. I always tell people that if you understand your risk and you're fine with the risk, then you're able to structure your portfolio. And I think what he said is fine. You've got to have a portion of your portfolio that is liquid, right? It's all down to the portfolio allocation. You've got to have a portion that you're looking for growth, right? And then when you look at the return on total, you'll be able to beat inflation. Simple thing as, let's assume you took some risk in fixed income instruments and then you took some with equity. If you get the timing right, you can actually beat inflation. So it's a bit of both. You know, it's just about understanding the risk you're going to, whether it's equity, whether it's alternative investments, whether it's like real estate you're going in, which is your risky part that gives you that additional growth in your portfolio. But then you have to have some portions in cash, some portion in stocks, and some portion in alternative investments. And I think when you look at the total growth in the portfolio, you can actually beat inflation.
Okay, thank you, Chuka. So we'll just wrap up with this last question. So a lot of people have been asking, what should I buy? Should I invest in Eurobond, invest in equities? So if you just please, both of you, give us your products or instruments to invest in these times.
I think for me, top three.
Yes,
I need to mention your risk appetite as well. And personally, I mean,
Chuka was already answered it, but we'll do so again. Top three for me, I still always would, I have a strong, even though I would say I don't consider myself that much of a conservative investor, but I also know that at these times, volatility is something that could happen. So because of that, I like to have a good allocation to fixed income. So the top three for me, number one, Nigerian bonds. You'd be surprised, but yes. Then Euro bonds, Nigerian Euro bonds, but also, you know, a diverse mix of other Euro bonds also makes some sense. Now, look at Euro bonds denominated in USD where you're earning 10 or 11%. That's a really good allocation. Then your Nigerian bonds where you're earning 10, 11% as well. That's also a good investment. And then the last one for me would be a basket of stocks. I won't pick any specific stocks right now, but I would say look at the blue chips. Look at the ones that are very high quality companies that you already know, that you use every day, that you know their business is not going away, but there was quite some drop in them in March. Many of the banks look quite interesting at this point. I would buy the top ones there and just close my eyes. I wouldn't even worry about future volatility because their pricing right now still makes sense. But you would have a long-term horizon for those investments in stock. I think the good thing to always keep in mind when you buy equities is buying equities, you're not looking to make money tomorrow. You're looking, you generally should be looking towards a whole business cycle, which is 5 years. But I would say because of where we are now, maybe at least 2 to 3 years. Buy and just close your eyes. If you have, it's always about a portfolio approach. I think people are always just looking for, okay, what is this one thing that will make me hammer? That is not a good attitude to make long-term wealth. Always try to build a portfolio that can weather the downturns as well as the good times. Sometimes you won't do as well as everyone else around you is, but over the long term, you will preserve your wealth and do better. One of the things I always mention to people is you hear about Warren Buffett all the time. One of the reasons Warren Buffett is considered one of the greatest investors of our time is that he's made a lot of money, sure. But do you know he makes his money not necessarily because he makes the most money every year. No. In fact, when things are good, Warren Buffett is usually doing a little bit worse than everyone else. But when things are bad, he just does better than everyone else because he doesn't take the kind of risk that will lose his money. So actually over the last 2 or 3 years, everyone has been saying, Warren Buffett, has he lost it? He's been sitting in cash for like the last few years. And now people are like, oh, wow, he's done it again. Now that he has so much cash, he's going to come in and just buy up everything cheap, right? So everyone should, especially for Nigerian investors who tend not to be as liquid, I say to them, this is the time for you to appreciate liquidity, having money in fixed income. is something that I think we need to do a lot more, because we don't look at fixed income as an investment. We think if it's not something that is going to double, then it's not an investment, but it is, and it's one of the ones that preserves your wealth the most. So just to summarize, top 3 for me, FGN Eurobonds, Nigerian bonds, as well as Nigerian equities, at least for now. And then, over the next 3 to 6 months, there will be other opportunities.
Thank you, Titi. Chuka, your own top 3, quickly, your top 3.
Really, honestly, I agree with everything that Titi has said. I think that is really what you should be looking at, some bit of combination between fixed income, whether it is in terms of Euro bonds or local currency bonds, as well as some bit of a portfolio in equity. Like Titi said, for me right now, it's look at fundamentals on the equity side. And with that, you're able to pick the right kind of stocks. I think at the end of the day, it's about having a long-term view, not a short-term view, because most of us, like TJ said, we're just thinking of now, how can I hit, can I get 20% return, 50% return? I hear this, you just think it's not bet Niger.
Exactly.
Definitely not bet Niger. I think that people have to have a long-term view for their investments. And once you make the right picks, you would end up seeing your return over time.
Thank you very much. And with that, we would like to bring this webinar to a close. A lot of people have been asking how can they invest in Euro bonds, how can they invest in FGM bonds, in commercial papers. I would just like to say that Union Bank offers these products, these fixed income products. And if you can see on the screen, there is an email address, and you can also contact us via our website. So if you send an email to retailsolutions@unionbankng.com, somebody will reach out to you. We have investment advisors who also help clients to work to help them with their financial goals. We have also partnered with Sankore, so if you have any questions or you're trying to get in touch with Titi, please just send an email as well, and we'll put you in touch with Sankore. So once again, we'd just like to thank you very much. And Chuka seems to have Chuka, do you want to just say goodbye, Chuka and Titi? Last words.
Yeah, I'd like Titi go first, then I would close the session.
Yeah. Well, I don't have much else to add other than, well, first of all, for Union Bank, thank you so much for having me. I really enjoyed this session. And for everyone, I think the key thing is be aware that, have I just been disconnected? Okay, I'm still there. I think be aware that this too shall pass. So don't do anything with just sort of a mind to make a quick buck. Just think through things, try to be strategic. And just remember, the quote I gave you from Charlie Munger is a really good one. The big money is not in the buying and selling, but the waiting. So I'll end with that. Thank you so much for having me.
Thank you, Titi. So I think, look, I'd like to say thank you to everyone. This is the first in a series or investment series that we're having. I think, like Deshola said, we have a partnership with Sankore. There'll be other sessions after this, basically talk about markets. As markets move, we like to be there close to our clients. This is all part of Union Bank. Like we say, we're building a simpler and a smarter bank. This is all part of building a simpler and smarter bank in adapting to the times and changes in the times that we find ourselves in at the moment. And so we're going to be doing a lot of things that bring us closer to the clients. Our duty is just to help clients come up with solutions and help them to achieve their goals. And that's what we're doing in Union Bank. This is part of the effort in ensuring that we're with you through the way, wherever and whatever investment you want. We will be coming out with something for investment funds on the digital side, which you will see soon. And it will help to bridge the gap between whether it is onshore investments or offshore investments, and once that comes out, I think the entire market will see how we at Union Bank are trying to support their investment goals. So I think from all of us here, we want to say thank you very much, and do have a lovely weekend, and looking forward to seeing you at the next webinar. Thank you very much.
Thank you.